What's going on? Welcome back to Fanatic Journey. So today we're going to talk to you about Serve Robotics. I want to go over some of the current data points, what's been coming out from the company itself, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So at the time of doing this video, it is up 22.03%. Very volatile day. And even if you did buy the dip from yesterday, which it did have a low of roughly around $10, give or take. So if you bought that dip, you are up 60+% right now. So round of applause for those individuals that did buy when there was a lot of blood, because the age-old saying, buy when there's a lot of fear, is so far working out in their favor. And right now, though, the fear and greed index is under the extreme fear category, so 24. So there is a ton of fear. At the same time, that is why you are seeing a little bit lower in institutions buying Serve. So when it comes down to it, there hasn't been all that much in actual news from the company. Last news came out July the 25th. So for a pretty big momentum play, you need more so constant news. Speculation will only take it so far. And based on SEC filings, so there was that prospectus that came out July 24th, wasn't necessarily a fan of that. Plus they also did have this S1, which was ultimately 5 million shares right here. They don't get any of the proceeds as well, so that's not necessarily the best. It looks like 2.5 million is going towards the pre-funded warrants, and this is one of the entities right here. So 𝗪𝗓𝗧𝗛𝗧, if I'm saying that right, Capital Master Fund, and then the second one is 2.5 million for exercise of warrants. So this kind of goes to show that this company is involved somewhat with toxic lenders, and so shorts typically love to pounce all over companies such as this. And this is one thing that they have been doing. So right now shorts are returning a small amount, so 112,000 shares, but 24.47% of the free float is being shorted. Works out to be 4.3 million shares overall being shorted. And probably some of them are returning because of this. So cost to borrow average is 439.62%. So that is a annual rate. So kind of just be aware of that, but still that is very, very high. Utilization 94.02, short score 81.32. It is on the threshold list, and it has been on the threshold list, it looks like, ever since roughly July the 26th. So in theory, any company trading on the threshold list longer, I guess, than 13 consecutive trading days, this is where the SEC is supposed to hold the market makers accountable. So it is getting kind of close to that. So we'll just have to wait and see if anything does happen. But you can kind of see there has been a lot of FTDs during what we have for information. So July and June and stuff like that. So definitely a good indication that there is a lot of naked shorting that's been happening with this company. In my last video, I did talk on how Serve Robotics was a very unique circumstance and a very interesting squeeze play. And I think I called it a pure squeeze play because there was no options. And normally what does happen is shorts hedge with options just in case a stock goes up. And one thing that has really developed since my last video, which did come out, I believe, like 2 weeks ago or something like that, options have kicked in. So again, something to keep in mind. But even today, there's about 2.4 million in calls, 210,000 in puts. So a lot of money is getting into Serve through options, and 66% of all the options being done so far today are optimistic and bullish. But then again, with the huge amount of shorts that are in Serve, plus there's clearly a lot of naked shorting that's happening, a lot of them are just hedging with call options. This is why you do see a overwhelming amount of bullishness, because if you do look right here, so with us right now at 16.69 right now, you see a lot of call options are being purchased near the closest strike price. So around that $17 mark, you see oddly a lot at 11 and then 20. But beside the point though, with these options right here, a lot of that is linked to just hedging. So that's the negative side of options. They also do only have the monthly chains. So probably market makers are just dabbling just to see the interest in Serve just to see if they can do weeklies, because again, market makers are the determining factor that create all of these chains. So if there is a demand, they will create it. So hopefully with this dollar value that's happening today, they are going to make weekly options. But then again, that's somewhat negative for this company on having a mother of all short squeezes. So again, just kind of be aware of that. This is the current open interest on the August 16th chains. So you do see, like I said, some optimism around that $20 mark, and then roughly between that $13 to $15 is where it's kind of anticipated. So once again, let me know your thoughts on that, and if you have been dabbling with options, let me know. If you guys haven't researched it, highly recommend you guys doing so, because it can be very, very profitable and beneficial. As of right now, with it at 16.52, it is trading between this pivot and this R1. So 14.48 will be the strong support that you'll want to watch for it to kind of hold. It did, luckily enough, not even test that today. So again, that's kind of a good thing. 22.98 will be that next strong target / resistance. So given the market momentum, if it does continue to kind of rally and positive momentum, then you will probably see this touched sometime this week, most likely in the next 2 days. So we'll just have to wait and see, but definitely this is one of those stocks that you need to add to your watch list. There's a lot of similarities to Serve and SoundHound. So I've covered SoundHound in the past under my other channel, Trending Stocks, but the only reason why they are very similar is because they both are hybrid stocks. So they both have an AI component, both are a momentum play and a squeeze aspect. And oddly, both did get somewhat popular because of a 13G. So NVIDIA did invest in both of them. So there is a lot of similarities. Whether SoundHound kind of loses momentum as people move to maybe Serve, we'll just have to wait and see. But SoundHound hasn't necessarily been performing all the best. So this is why, like I said, there's a difference between a company putting out substantial news, which is obviously in turn going to drive it higher, and a company that is just reliant on, for instance, just speculation. So hologram, I've brought this up in the past. So hologram over this last little bit is down 98.67%. So this is a good kind of example of a stock that did get that injection from NVIDIA, and they haven't put out jack all. So the company just goes down, so speculation will only take you so far. SoundHound seems to be recovering slightly, so up 8.18%, and you can kind of see over this last 1 year, it is up 124%. So yeah, I think in general, there is a lot of good positives to, I guess, the history and how both of them came to be. But yeah, definitely Serve is one of those ones that you need to add to your watch list, because there is a lot of upside that could be coming. So don't forget to hit that thumbs up and subscribe. Do you still think that Serve is a squeeze play, or are you investing on the long term? As of right now, on a side note, there hasn't been any analyst ratings to this company, so we'll just have to stay tuned. If there is a rating that does come out and it is relatively bullish, then you will see this stock go up like crazy, similar to what SoundHound did. So let me know your thoughts. Don't forget to hit that thumbs up and subscribe. And one final thing I just wanted to share with you, take advantage of this promo. Simply sign up for a new account, throw $100 at it, and they give you 5 free stocks. Each stock is valued up to $2,000. This promo has been extended up until the end of August as well. So take advantage of this. Link in the description below and also the comments. With all that said, appreciate all of you watching.